Okay, so you're here because you want to really get this stuff right. You're not just skimming headlines.
Right.
You're ready to master it.
Yeah.
So let's unpack one of those phrases that honestly can sound kind of boring, but is actually the key to unlocking some serious potential for your business.
Absolutely.
Business credit scores. You sent us a ton of articles about this, so we are going to dive deep, unearth those golden nuggets you need to know.
I think what's fascinating here is that, most people kind of get personal credit scores, but when it comes to business, it's a whole new ballgame.
Right.
Higher stakes.
It's like personal credit on steroids.
Yeah.
But before we get into the nitty gritty, can we just break down what exactly is a business credit score and why is it so crucial?
Yeah. So think of it as your company's financial GPA.
Okay.
It's a number that tells lenders, suppliers, even potential customers how healthy your business is financially. And a good score can really be the difference between getting that crucial loan with a favorable interest rate or being stuck with limited options and sky-high costs.
So it's not just about getting a loan, it's about getting the right loan.
Precisely.
One that sets your business up for success.
And it goes beyond loans.
Okay.
So imagine you're a company that's supplying construction materials, right?
Mm.
You are much more likely to extend favorable terms to a business with a proven track record.
Right.
A high financial GPA, so to speak.
Makes sense, yeah.
Because it reduces your risk.
It's like having a VIP pass that gets you past the velvet rope of business financing and better deals.
Absolutely.
Here's something that really surprised me when I was going through all this.
Okay.
Customers might actually be checking your business credit score.
It's true.
Really?
In today's world, consumers are savvy. They do their research.
Okay.
And a strong credit score acts as a trust signal. It says this business is reliable, they pay their bills, they're likely to deliver on their promises.
Wow. So it's like a public display of financial responsibility.
Yeah.
That can actually attract more customers.
It is.
Now, I know from personal experience how tempting it can be to kind of blur the lines between personal and business finances, especially when you're first starting out.
Yeah.
But one thing that really stood out in all these articles is the huge importance of keeping them separate.
Yeah.
Why is that?
Well, if we connect this to the bigger picture, mixing personal and business finances is like building your business on shaky ground.
Okay.
Imagine this. You decide to buy a new car.
Okay.
Maybe a little more car than you can comfortably afford. That impacts your personal credit.
Right.
But if your business credit is entangled with your personal finances, that car purchase could actually hinder your ability to secure a loan for your business.
Ouch.
Right.
Talk about a financial hangover.
Yeah, it can really.
So it's like having separate bank accounts, almost like building a firewall.
Yeah.
Between your personal spending habits and your company's financial reputation.
Exactly. And that separation isn't just about protecting your personal credit.
Okay.
It's also about building a clear and independent credit history for your business, which, as we know, makes it easier to secure funding.
Right.
Negotiate favorable terms with suppliers down the road.
So it's not just about avoiding disaster.
Right.
It's about setting yourself up for long-term success.
Exactly.
Now, one article highlighted a connection between business credit scores and cash flow that really clicked for me. And they used the analogy of a water pipe.
Yeah.
Which I thought was really interesting.
Classic, but effective.
Yeah. So can you kind of break that down for us?
Yeah. So a good credit score is like a wide pipe.
Okay.
Cash flows smoothly, easily funding operations expansions, even those unexpected bumps in the road.
Makes sense.
But a poor score, that's a narrow, rusty pipe with blockages, and it restricts your flow, making it harder to cover expenses, meet payroll, and seize those growth opportunities.
It makes you vulnerable.
It does.
To those financial droughts that can really damage a business.
Exactly.
And here's where it gets really interesting. Good credit can actually impact your insurance premiums.
It's true.
But seriously.
Yeah.
I was shocked when I read that. I always thought insurance companies only cared about things like my driving record or, the age of my building.
Right.
But my business credit score, that's wild.
It might seem counterintuitive, but insurance companies use a variety of factors to assess risk. And your business credit score is one of them. A good score suggests you're responsible.
Okay.
Less likely to file claims.
Got it.
Making you a more attractive customer. This can translate into lower premiums.
Okay.
And potentially even better coverage options.
So it's like getting a discount for being financially responsible. It's almost like a secret bonus level in the game of business.
It is. It underscores how a strong credit score can save you money
Right.
in unexpected areas and create this ripple effect of positive outcomes across your entire operation.
So we've established that building good business credit is like having a superpower.
Yeah, it is.
It opens doors to funding,
Absolutely.
strengthens your reputation,
Yeah,
attracts customers,
it does.
and even saves you money on insurance.
That's right.
It's not just about avoiding bad things.
Mm-hmm.
It's about actively creating a more stable
Yes,
and successful future for your company.
that's precisely it.
Yeah?
And the best part is just like any superpower, this one is attainable.
Okay.
It requires effort strategy and a commitment to responsible financial practices, but the rewards are well worth it.
So now that we've kind of laid the foundation,
Yeah,
let's talk about how to actually build that good credit.
let's do it.
What are the steps?
Absolutely.
All right. So we've established that building good business credit is like having a financial superpower. But how do we actually get those superpowers? Is there a secret formula? Some ancient business scroll hidden deep in a vault?
Well, there isn't a hidden scroll, but there are definitely strategic steps you can take.
Oh.
One of the first and most crucial is to establish a separate credit identity for your business.
Okay.
Think of it as creating a superhero alter ego for your company,
I love that.
complete with its own origin story in the financial world.
Okay. I'm loving this superhero analogy.
Yeah.
So how do we forge this financial alter ego? What's the origin story look like?
It starts with getting an employer identification number, or EIN, from the IRS.
Okay.
It's like your company's social security number.
Got it.
It's official identifier in the world of business.
Okay.
Next, you want to register your business with credit reporting agencies like Dun & Bradstreet. This gets your business on their radar and allows them to start tracking your creditworthiness. And of course, opening business bank accounts and credit cards is essential.
Right.
This demonstrates that you're serious about separating your business finances from your personal ones.
So it's like setting up a secret headquarters for your company's finances.
Exactly.
A place where they can operate independently
Yeah.
and build a strong reputation.
And just like any superhero who trains and hones their skills,
Right.
building good credit requires consistent effort and responsible financial habits.
Okay.
One of the most important things is to pay your bills on time,
Right.
every single time.
Because just like a superhero wouldn't skip out on training,
Right.
a responsible business owner wouldn't let bills pile up or miss payment deadlines.
Precisely, late payments are like kryptonite to your credit score.
Ooh.
They can seriously weaken it and make it harder to secure funding,
Okay.
negotiate favorable terms in the future.
Got it.
And it's not just about avoiding late payments. You also want to keep your credit utilization low.
Credit utilization. That's a term that trips a lot of people up.
It is.
Can you just remind us what it means and why it matters?
Of course. Credit utilization is the percentage of available credit you're currently using.
Okay.
Let's say you have a business credit card with a $10,000 limit and you've charged $2,000.
Okay.
Your credit utilization is 20%.
Okay.
Keeping this percentage low, generally below 30%, is a good sign that you're managing your credit wisely and not overextending yourself.
Okay.
Think of it like a superhero, knowing their limits and not pushing themselves beyond their capabilities.
So it's about showing lenders that you're not reliant on credit
Exactly.
to keep your business afloat. You've
Yeah.
got things under control.
You do.
Now, one thing that came up in the articles was the age of your credit history.
Okay.
Does that really matter for businesses too?
It absolutely does.
Yeah.
A long and positive credit history demonstrates stability and reliability.
Okay.
It's like a superhero with years of experience under their belt. I like that.
They face challenges, overcome obstacles, and emerge stronger.
Right.
Lenders and suppliers find that kind of track record reassuring.
So even if you're a new business, don't worry.
That's right.
You've got time to build that impressive credit history,
You do.
just like a young superhero.
Right.
You've got to start somewhere. Now, the articles also mention the importance of regularly reviewing your business credit report.
Yes.
Why is that so crucial?
Your business credit report is like your company's financial health record.
Okay.
It contains detailed information about your credit accounts, payment history,
Okay.
and any negative marks like late payments or collections.
Okay.
Regularly reviewing this report allows you to catch any errors or inaccuracies that could be hurting your score.
Okay.
It's like a superhero checking their suit for any tears or weaknesses before heading into battle.
So it's not just about monitoring your score.
Right.
It's about ensuring that the information being reported is accurate.
And reflects your business's true financial health.
Exactly. And just like a superhero wouldn't ignore a potential threat.
Right.
You shouldn't ignore any red flags that pop up on your credit report. Addressing issues promptly
Right.
can prevent them from escalating and causing further damage.
Yeah, that makes sense.
Now let's shift gears
Okay.
and talk about the why
Okay.
behind building strong business credit.
Okay.
We touched on access to funding,
Right.
but let's delve a little deeper.
Okay, because I'm guessing it's about more than just getting a loan
It is.
when you need it.
Yeah.
It's about opening up a world of opportunities
Exactly.
for your business.
That's right. Think about all the things you might need funding for: expanding your operations, launching new products, hiring top talent, or even acquiring another business.
Wow, yeah.
These are the milestones that propel your business forward.
Right.
And a strong credit score is often the key that unlocks those doors.
So it's like having a treasure map that leads to the financial resources you need to achieve your biggest goals.
It is. And beyond traditional bank loans, good credit opens doors to a wider range of financing options, from lines of credit to equipment financing and even venture capital.
It's like having a whole arsenal of financial tools at your disposal,
Exactly.
allowing you to choose the best option
Yeah,
for your specific needs and goals.
precisely. And here's another perk. A strong credit score can give you a significant advantage when negotiating with suppliers.
Because suppliers want to work with businesses they know they can rely on.
That's right.
A good credit score is like a guarantee that you'll pay your invoices on time
Exactly.
and in full.
This can lead to more favorable payment terms,
Okay.
bulk discounts, and even early access to new products or services.
Yeah.
It's all about building trust and fostering strong business relationships.
It's like being a superhero
Is
who's
that
known
what?
for their integrity and dependability. Everyone wants to be on your team. Now, one thing that often comes up when talking about business credit is the concept of personal guarantees.
Okay.
This can be a tricky area for many business owners, especially those just starting out.
It's true. Personal guarantees can be a necessary evil in the early stages of building business credit.
It's like a superhero having to reveal their secret identity
Right.
to gain someone's trust.
Yeah.
It can feel risky,
Yeah.
but it's sometimes necessary to move forward.
That's a great way to put it. Lenders see small businesses as inherently riskier
Right.
than larger, more established companies.
Makes sense.
So to mitigate that risk,
Okay.
they often require personal guarantees,
Okay.
which means you're personally liable
Got it.
for the debt if your business can't repay it.
So even though you've worked hard to separate your business and personal finances,
Right.
that line can get blurred again
It can.
when personal guarantees are involved.
Yes. But here's the good news.
No.
As your business credit strengthens and your company demonstrates a track record of success,
Right.
the need for personal guarantees diminishes.
So it's a temporary hurdle that you can eventually overcome by consistently demonstrating financial responsibility.
Exactly.
Now let's talk about some common mistakes businesses make when it comes to building credit. I'm sure we've all made a few financial missteps
We'd all have.
along the way.
One of the most common mistakes, and one we've already touched upon, is not separating personal and business finances.
Right. It's tempting, especially in the early days, to just use your personal credit card for everything.
It is.
But we've established that's like mixing matter and antimatter.
Right.
It can lead to a financial explosion.
Exactly. Keeping those finances distinct is crucial
Right.
for building a clear and independent credit history for your business.
Mm.
Another common mistake is not using business credit at all.
Wait, really?
Yeah.
Some businesses just avoid credit altogether.
It happens more often than you might think. Some business owners are afraid of debt, or they simply don't understand the importance of building business credit.
Okay.
But remember, using credit responsibly
Right.
is like a workout
Okay.
for your credit score. It helps you build strength and endurance in the financial world.
So even if you're not actively seeking a loan right now,
Right.
using credit wisely,
Yeah.
paying your bills on time
Absolutely.
is essential for building a positive credit history.
Absolutely. Another mistake is not paying bills on time.
Right.
This seems obvious.
Yeah.
But life happens.
It does.
Invoices get misplaced. And suddenly you're hit with late fees.
Right.
And a ding to your credit score.
It's like forgetting to recharge your superpowers.
That's a good one.
You might be able to function for a while, but eventually your strength will dwindle.
That's a great analogy.
Yeah.
It's crucial to establish systems that ensure timely bill payments.
Right.
Whether that's setting up automatic payments,
Right.
using a bill pay service, or simply marking due dates on your calendar,
Right.
find what works for you.
Okay.
And stick to it.
Organization is key.
It is.
Now, what about maxing out credit cards?
Okay.
Is that as detrimental for businesses as it is for individuals?
It absolutely is. Maxing out your credit cards
Okay.
sends a signal to lenders that you're overextended
Okay.
and potentially risky. It's like a superhero pushing themselves beyond their limits and ending up exhausted and vulnerable.
So it's not just about the amount of debt you have,
Right.
but how much of your available credit you're using.
Yeah.
It's about showing lenders that you're using credit responsibly
Exactly.
and strategically.
Precisely.
Okay, now here's another mistake that many businesses make.
Okay.
Ignoring their business credit report.
Right out of sight, out of mind.
Right. But we talked earlier about how important it is to regularly review that report.
Yes. It's crucial.
Okay.
Your business credit report is like a financial mirror. It reflects your creditworthiness
Okay.
and highlights any areas that need attention. Ignoring it won't make problems disappear.
Right.
In fact, it could allow them to fester and cause more damage
Right.
in the long run.
It's like a superhero ignoring a distress signal. You might miss a crucial opportunity to intervene
Exactly.
and prevent a bigger crisis.
Exactly. So remember to regularly review your report,
Right.
catch any errors,
Okay.
dispute inaccuracies,
Okay.
and stay informed about your business's financial health.
So important.
It is.
Okay, so we've talked about common mistakes, but let's dive into those different types of business credit scores. Are they all created equal, or are some scores more powerful than others?
That's a fantastic question and one that often causes confusion. It's like discovering there are different levels of superheroes, each with their own unique strengths and weaknesses. One of the most well-known and influential scores is the Dun & Bradstreet Paydex score.
Ah, yes, the Paydex score. That one pops up a lot in the business world.
It does. This score ranges from 0 to 100, with higher scores indicating better creditworthiness. It's solely focused on your business's payment history with suppliers, specifically how quickly you pay your invoices.
So it's like a report card for how promptly you pay your bills. A high Paydex score shows you're reliable and prioritize fulfilling your financial obligations.
Exactly. Think of it as a testament to your company's integrity and commitment to strong vendor relationships. Then we have the Experian IntelliScore Plus. This score also ranges from 1 to 100, with higher scores indicating better creditworthiness, but it takes a more holistic view of your business's financial health.
Okay, so it's not just about paying bills on time. What other factors does the IntelliScore Plus take into account?
It considers your business's credit utilization, public records, and even demographic information. It's like analyzing a superhero's entire backstory, not just their recent exploits.
So it paints a more complete picture of your business's financial standing.
Precisely. And finally, there's the Equifax Small Business Credit Risk Score. This one's a bit unique because it ranges from 101 to 992, and in this case, a lower score is actually better.
Wait, so a lower score means you're less risky. That's a bit counterintuitive.
It is. Think of it this way. Imagine a superhero with an invisibility cloak. The lower their visibility score, the harder they are to detect, and the less risk they pose to their adversaries.
Okay, that makes sense. So the Equifax score is all about minimizing your perceived risk to lenders.
Exactly. It considers your business's credit history, financial information, and public records to determine your overall credit risk level. The key takeaway here is that not all business credit scores are created equal.
Right.
Each score has its own unique formula and purpose.
Okay.
So it's important to understand which scores are most relevant to your industry and the lenders or suppliers you work with.
So it's like knowing which superhero's powers are best suited for a particular mission. You wouldn't send a speedster to a strength competition, right?
Precisely. Now let's move on to some specific strategies you can use to boost your business credit scores. Beyond the fundamentals we've discussed, are there any power moves you can make to really level up your creditworthiness?
Okay, because I'm sure our listeners are eager to unlock those secret levels of financial success.
One strategy is to establish trade credit accounts with suppliers. This is when a supplier extends credit to your business, allowing you to purchase goods or services and pay for them later.
So it's like getting a mini loan from your suppliers, demonstrating that they trust your business to pay its debt.
Exactly. By consistently using trade credit and paying your invoices on time, you're building a positive payment history, which strengthens your credit scores and deepens your relationships with key suppliers.
It's like a superhero teaming up with a trusted ally. You're both stronger together.
Another strategy is to obtain business credit cards and use them responsibly.
We talked earlier about the dangers of maxing out credit cards, but using them strategically can actually benefit your credit score, right?
Absolutely. Having a business credit card and using it for small purchases and paying it off in full each month demonstrates responsible credit management.
So it's like a superhero practicing their skills regularly. The more you use credit wisely, the stronger your financial muscles become.
That's a great way to put it. And as your credit score improves, you may qualify for higher credit limits, which can further enhance your credit utilization ratio.
It's like leveling up in the game of business finance. You're unlocking new opportunities and gaining access to more powerful tools.
Exactly. Now, another strategy is to diversify your credit mix. This means having a variety of credit accounts, such as trade credit, business credit cards, and installment loans.
So it's like a superhero having a diverse set of superpowers, each one valuable in different situations.
Precisely. A diverse credit mix shows lenders that you can handle different types of credit responsibly, which boosts your credit worthiness.
Okay, so we've got trade credit, business credit cards, and a mix of credit types. Any other power moves we can make?
Yes, one more. Keep your business information up to date with credit reporting agencies. This includes your business address, contact information, and ownership structure.
So it's like making sure your superhero's secret lair is always secure and accessible. You don't want any villains sneaking in and causing chaos.
Exactly. Accurate and up-to-date information ensures that lenders and suppliers have a clear and reliable view of your business, which can positively impact your credit score.
Okay, so we've covered a lot of ground today, from understanding what business credit scores are to exploring strategies to boost them. But before we wrap up, I want to touch on something that's been revolutionizing the financial world.
Yeah.
The role of technology in business credit.
It's an exciting time to be in business.
It is.
With the rise of fintech.
Yeah.
Providing incredible tools and resources.
It feels like there's a new app or platform launching every day.
There is.
Promising to make managing finances easier.
Yeah.
And more efficient. But how are these technologies specifically impacting business credit?
Well, many fintech companies offer tools that allow you to monitor your business credit scores in real time.
Okay.
Imagine having a personal credit assistant in your pocket, constantly tracking your progress and alerting you to any changes or potential issues.
That's incredible. No more waiting for those snail mail credit reports.
Yeah.
You can stay on top of your credit health 24/7.
Exactly. And some platforms go beyond monitoring.
Oh, yeah.
They use artificial intelligence and machine learning
Wow.
to analyze your spending patterns and provide personalized recommendations for improving your credit score.
So it's like having a financial coach in your pocket, giving you tailored advice and strategies to level up your credit game.
Precisely. And then there are platforms that facilitate access to alternative financing options like peer-to-peer lending and crowdfunding. These platforms often have different underwriting criteria than traditional lenders, which can be a game changer for businesses that are just starting out or have faced financial challenges in the past.
It's like discovering a secret portal to a whole new world of financial opportunities. But with so many fintech solutions out there, it can be overwhelming to know where to start. Any advice for businesses that are looking to explore these tools?
Absolutely. First and foremost, do your research.
Okay.
Choose platforms that are reputable and align with your specific business needs.
Right.
Look for platforms with a proven track record,
Okay.
strong security measures, and excellent customer support.
So it's like choosing a superhero sidekick.
Yeah.
You want someone you can trust who has the skills and expertise to support your mission.
Exactly. And as with any financial decision, read the fine print.
Right.
Understand the terms and conditions.
Okay.
And don't be afraid to ask questions.
Yeah.
Knowledge is power. And in the world of business credit, that power can unlock incredible opportunities for growth and success.
It's about taking control of your financial destiny
It is.
and shaping a future where your business can thrive and reach its full potential.
Well said. And remember, building good business credit is a journey, not a destination.
Right.
It requires ongoing effort and a commitment to responsible financial practices.
It's like a superhero's never-ending quest to protect and improve their city. There will always be new challenges to face and new ways to grow.
But by staying informed, making smart choices, and leveraging the power of technology, you can navigate the complexities of business credit with confidence and achieve extraordinary things.
So to our listeners out there who are on this journey of building business credit, we say, keep going, stay focused, stay informed, and never underestimate the power of financial integrity. And remember, we're here to support you every step of the way.
Now, before we sign off, I want to leave you with a final thought. As you continue to build and manage your business credit, think about the impact your financial decisions have, not just on your company,
Okay.
but also the community and the world around you.
Okay.
How can you use your financial resources to create positive change?
Right.
How can you be a responsible steward of both your business's finances and the planet's resources?
Those are big questions, but incredibly important ones. It's about recognizing that financial success is not just about profits and losses,
Right.
but about creating a positive impact on the world.
Exactly. It's about using your financial superpower for good.
Well, that's all the time we have for today's deep dive into the world of business credit scores. We've covered a lot of ground, but I hope you feel empowered and inspired to take control of your business credit and build a brighter financial future for your company.
And remember, knowledge is power. The more you understand about business credit, the better equipped you'll be to make informed decisions and achieve your financial goals.
So keep learning, keep growing, and keep striving for financial excellence. We'll be back next time with another deep dive into a topic that's shaping the business world. Until then, stay curious and stay informed. And keep those questions coming. We love hearing from our listeners and exploring the topics that matter most to you.